Let's talk about the StatsCan October jobs report, shall we? If you only read the headlines, you'd think everything's fine. 67,000 new jobs, unemployment down to 6.9%. But here's what they're not telling you. Canada lost nearly 20,000 full-time jobs while adding 85,000 part-time positions. And if you're in Calgary, we need to talk. Because while our local numbers look different from the national picture, there's a trend here that should concern anyone thinking about buying or selling real estate in 2026. Let's start with what happened across Canada in October. The headline is, we're up 67,000 jobs. Sounds decent. The reality is, full-time employment lost 18,500 jobs. Part-time employment gained 85,100 jobs. The net result, 66,600. Now, here's the kicker. This comes right after September, where Canada added 106,000 full-time jobs. So we went from the strongest full-time job growth we've seen in months to actually losing full-time positions in October, which is pretty brutal. So it begs the questions, where did these part-time jobs come from? Retail and wholesale trade led the charge with 40,700 new jobs, the single biggest sectoral gain. Transportation and warehousing added 29,500, both classic holiday hiring sectors. But here's the thing, these numbers are already seasonally adjusted. Statistics Canada filters out normal seasonal patterns, so typical October holiday hiring shouldn't show up as unusual growth. The fact that retail is still the biggest job creator after that adjustment tells us retailers are hiring more aggressively than the historical October average. This means we should expect retail hiring to continue or even accelerate in November as we head into Black Friday and peak Christmas shopping. The question is, are these jobs replacing lost full-time positions elsewhere in the economy, or are they just temporary band-aids that disappear in January? That's the test. If we're trading construction jobs and oil and gas jobs for seasonal retail work, that's not economic strength, that's churn. Neither interpretation is great for the economy. Now, let's talk about what's happening here at home, because Alberta's story is more complex. Alberta's September, we had a strong month, added 43,000 jobs, which offset the losses from July and August. Unemployment dropped to 7.8%. That felt like a turning point. Alberta's October added 10,300 jobs. Provincial unemployment held at 7.8%. On the surface, that's steady growth. But we need to talk about the teacher strike because this distorted the October numbers significantly. Alberta teachers went on strike and were subsequently locked out, closing most elementary, junior high, high schools across the province. The labor force survey week was October 12th to 18th, which occurred during the peak of the strike. Teachers returned to work late in October after the survey was done. Here's how this affects the numbers, and this is important. When teachers are on strike, they don't become unemployed in the statistics. They're still considered employed because they have jobs to return to. But they lose work hours during the strike. So what happened is employment numbers stayed relatively stable, but total hours worked dropped significantly. This is exactly what we saw. Total hours worked in Canada declined 0.2% in October despite employment rising. Nationally, 87,000 employees lost work hours due to labor disputes during that survey week, with Alberta being the biggest contributor. What this means for the November report, since teachers returned to work late in October, the November survey, which comes out December 5th, will capture them working full-time hours again. We should see a bump in hours worked in November, but that doesn't necessarily mean the labor market is strengthening. It's just returning to normal after the strike ended. And don't even get me started on that. I really feel for the teachers going back without coming to a resolution for their contracts, but for the sake of the students, it's really important that they are in school. I will say, you can vote for a political party, but not wholeheartedly agree with every single thing they do or how they handle situations, which I actually think is pretty important for us to be talking about. Anyways, here's where Calgary gets interesting. Calgary's October numbers are full-time jobs up 4,100, Part-time jobs down 700. So that's a total of 3,400 jobs. Calgary unemployment is at 7.9%, down 0.2% from 8.1% the month before. We're actually bucking the national trend. While Canada overall is hemorrhaging full-time jobs and packing on part-time work, Calgary added full-time positions and shed part-time jobs in October. So are we doing better? Not so fast. Calgary's full-time employment is still 16,000 jobs below where we were in February 2025. That's pretty significant. We peaked 8 months ago and haven't recovered that ground. The wage story tells us more. Alberta average hourly wage is $37.93, so up a whopping 8 cents. Alberta average weekly wage is $1,423.85, down $9.77. Hourly up, weekly down. That means fewer hours being worked across the province. Now, part of this is absolutely the teacher strike. Thousands of teachers lost a week or more of work hours during October, which drags down the average weekly wage, even though their hourly rate didn't change. But here's the concerning part. This pattern of fewer hours worked isn't unique to Alberta, and it's not just about the strike. Nationally, total hours worked declined 0.2% despite employment rising. That suggests a broader trend of employers cutting hours, shifting to part-time work, or simply having less work available, even when people technically have jobs. So yes, the teacher strike amplified Alberta's numbers in October, but even accounting for that, we're seeing signs that people aren't getting the hours they need. When we see November data, after teachers are fully back, we'll have a clearer picture of whether this is a temporary strike effect or a deeper issue with hours and underemployment. Now, the sector breakdown matters. Year over year in October, oil and gas down 9%. This is a major reversal from the gains we saw in 2025. Construction is up 1%, so barely growing, way down from last year. Retail trade is up 0.6%, so essentially flat. Now, utilities are up 45.6%. Sounds massive, but it's from a tiny base. Here's what this tells me. We're losing high-paying full-time positions in energy and construction, and we're not replacing them with equivalent work. The jobs being added aren't in the sectors that traditionally support Calgary's housing market. So why should you care about full-time versus part-time employment if you're thinking about buying real estate? Mortgage qualification is everything. Lenders want to see stable, predictable, full-time income. A part-time retail job, even if it's legitimate work, doesn't carry the same weight when you're applying for a $500,000 mortgage. The Calgary reality is the median home price here requires serious income to qualify. With the mortgage stress test, you need to qualify at the higher of your contract rate plus 2% or 5.25. That means even with rates dropping, you still need solid full-time employment to get approved. What I'm seeing in the market is like back in October 2023, 48% of homes in Calgary were selling at or above list price. We're now sitting at 17%. That's a massive shift. And it's not just because of interest rates. It's because the pool of qualified buyers is shrinking. And currently there is a lot more inventory available. When full-time employment peaks in February, and then drops 16,000 positions by October. That's 16,000 potential buyers who either lost their ability to qualify for a mortgage or are being much more cautious about making the biggest financial decision of their lives, or are wanting to see if their employment stabilizes before buying, or are now struggling even more to survive, let alone qualify for a mortgage. But if that is their goal, that's a lot more difficult to save for. Like this affordability paradox we're in, interest rates have come down significantly. Now, 3.79% for a 5-year fixed rate or 3.45% for a 5-year variable, according to RateHub. Home prices have been going down. It definitely depends on the segment by how much, but employment quality is weakening and financial stress remains elevated. That third factor is canceling out the first two. Let's zoom out and look at what else is concerning. Financial stress remains high. As of October, 27.7% of Canadians are living in households experiencing financial difficulties. That's more than 1 in 4. In Alberta, it's even higher at 31.3% last year. The national employment rate, Canada's at 60.8%. That's better than 60.6% where it was, but we're still below the 61.1% we saw in January and February. More people in the labor market, but proportionally fewer of them working. So what happens next? The November jobs report, as I mentioned, drops December 5th. I'll have another video out for that one. That's when we'll see if these retail gains continue. Full-time employment rebounds nationally. Alberta oil and gas sector stabilizes or continues declining. Come on, pipeline. I unfortunately have very little faith in our federal government to actually move that project forward, but I so badly want to be wrong on that. For Calgary specifically, I'm watching, do we continue adding full-time jobs, or was October a blip? Does that 16,000 job gap from February close, or do we slide further? What happens to our unemployment rate if population continues to grow? The energy sector matters more here than anywhere else in Canada. That -9% year-over-year decline in oil and gas employment is not just a statistic. Those are high-paying jobs that support home purchases, renovations, consumer spending. When that sector struggles, everything downstream feels it. Here's my take. If you're thinking about buying, this isn't necessarily a don't buy signal, but it is absolutely a don't overextend signal. I mean, that should always be the case. But if you're in a secure full-time position, especially in a sector that's not showing weakness, you're in better shape than a lot of people right now. But don't buy based on rate cuts alone. Yes, rates are down. Yes, that helps your monthly payment. But if there's any uncertainty about your employment situation, wait. We're not in a market where you need to rush. If you're selling, price realistically. The pool of qualified buyers is smaller than the employment numbers suggest, and buyers know they have options. We're sitting at 17% of homes selling at or above list. As I said, that's the market telling you something. Buyers are also really taking their time. So if you have a home on the market and you're priced right, just hang in there. If you're watching from the sidelines, you're not missing out. This market isn't running away from anyone. What we're seeing is a slow normalization, possibly heading toward more significant softening if the labor market continues to weaken. The November data is critical. If retail continues to dominate job growth with more part-time positions, that confirms the pattern we're seeing. But the real test comes in January and February 2026. That's when the seasonal retail jobs typically disappear. If October's 40,700 retail jobs were largely holiday hiring, we should see those positions vanish in the new year. And if that happens, while full-time employment stays weak, we could be looking at significant employment declines in Q1. Combined with continued population growth, that could push unemployment significantly higher in early 2026. You know, the bottom line here is October's jobs reports looks okay until you dig into what kind of jobs were created. This matters for real estate, and we will see how it ultimately affects our market. Thanks for watching. I really appreciate it, and I'll see you soon.